Hi believers, this is Brijesh from Waya team. In the previous month, we mentioned that 2300 would act as a strong support, and it did so. Overall, the correction amounted to 11.5% for the recent life highs for the Nifty. This healthy correction has led to favorable stock prices for selected quality mid and small cap stocks. Let's dive deeper into the charts to get a better understanding of what lies ahead. Let's look at the chart of Nifty. Nifty was unable to hold this 24,000 support level and dipped below to 23,300 support level as was expected by us. 23,300 acted as a strong support and we witnessed a sharp bounce from the level along with a doji formation on the monthly chart. Both the data points suggest that selling pressure is exhausting at the lower end. Seasonally, December has been the best month for Nifty gains since 1998. Average gains has been 3.2%. Once Nifty sustains about this 24,350 Fibonacci resistance zone, we expect Nifty to head towards 24,800 levels. Let's look at the chart of Bank Nifty. Banks outperformed in the month of November and closed the month higher 1.1%. Outperformance was mainly led by bounce in PSU banks from oversold zone and HDFC Bank in private sector. Support in the index is placed around 5,951,000 range where there is a gap support. While resistance will be faced at 52,900 level, this has been the previous high in July 2024. Let's look at the broader market indices. If you notice in both the ratio charts, since March 2020 through bottom, mid and small cap stocks have outperformed the large cap stocks. We expect this outperformance to continue. If you see, there is a range formation and still they are not underperforming. As long as the small and mid cap stocks does not underperform, the broader market rise will continue on the upside. Let's look at the sectors that can outperform in December. We like this realty index. You can see that the realty index has broken out from this downtrending line and is resisting around 1040 levels. 1005 support level, being the gap support, will act as a strong support, and the upside can be as much as 6.5% in the month of December. We like DLF, Brigade Enterprises, and Shobha Limited for the sector that could be likely outperformers. Let's take a look at the FMCG index. The index witnessed sharp downside of 16.5% from its recent life highs. Indicators are extremely oversold, and the index has bounced back from the support of 55,500 to 800 range that has acted as resistance and support in previous instances. We expect this upside to continue till 59,800, that will be 3%, till 61,000, which will be 5.2% upside in the month of December. We like stocks like ITC, Hindustan Unilever, and Tata Consumer that could likely lead the gains for the sector. So let's see what to expect in the month of December. We strongly feel short-term bottom is in place and we expect markets to slowly grind higher. Historically, December has been the best month for equities since 1998. Trump's forward-looking policy statements will lead to rise in volatility and you can't rule out sharp downside moves. Sectors such as realty, FMCG and PSU banks can outperform the broader indices. Buy on dip should be the strategy for the month of December. At Waya, we make our best efforts to keep you informed about markets through our weekly bites and monthly sectoral update. Thank you and good night.